Evening, everyone. Welcome to Officer 24/7. My name is Nihar Kavalia Bhatnagar, and I am with you with the area of AFM. I hope I'm clearly audible as well as visible. Okay. Uh, if the session has been helpful to you, if the series entirely has been helpful, please go ahead and share this session along with this, like it as well. And if you haven't subscribed to our channel yet, then please do the same as early as possible. Okay. Now, as I told you, the next series has begun. That means we have started with our module B. है ना? Uh, no, actually we were done with the module B even. We have started with the module C. The module C, we have now moved towards the one of the most important chapters, that is ratio analysis. A chapter which is always asked in the examination. That too, not for some smaller amount of numbers ki the marks are little less that you can look forward to it, you can miss it out. No, you just can't. This particular chapter is super important due to its weightage in terms of case studies as well as the individual MCQs as well. Done? So let's begin with acha. I hope now it is visible. Visible everyone? Super important plus case studies plus important MCQs. मतलब I expect कि at least 5 to 6 marks for your examination would be from here itself. Done? Okay. Then let's begin and start with our topic, ratio analysis. This is one of my favorites. The reason is ratios is overall divided into uh, the following parts. That is number one, liquidity ratios. Liquidity ratios means those ratios which are related to the area of liquidity. Second is solvency. Liquidity, solvency. Third is profitability and market test. Then is turnover ratios. And there are some miscellaneous ratios as well. So you will find all these specific bases on which we define our ratios. So on this basis, you will be able to find out what we do about the entire area of ratios. Matlab ratios is basically finding a numerical relationship between two or more items. And while finding those numerical relationships, what are we doing? The numeric relationship is defined and understood uh, regarding the ups and downs. Maybe it has gone up in the last few years, maybe it has gone down, or if I say they have some ideal ratios as well, ki nahi, this ratio should be of this particular amount only. That's also something that you will find in ratios. So that's the basic crux, a little in-depth information regarding ratios. Okay, now here comes the first question, everyone. Today I have covered good number of questions and many of them are taken directly from the IBF book itself. Matlab, as it is, the questions which are given in the book, I'm starting with those ratios, those questions, so that you understand what kind of questions are there in the book itself. The basic purpose of the series is to let you know what kind of questions are asked in the examination. So I am covering the entire book, strictly covering the entire area, whatever has been there in the examination based upon the previous year questions plus the IIBF book material, so that you don't have a problem in terms of understanding what kind of questions are normally asked in the exam. Okay, everyone, here comes the first question. Accounting ratios help in interfirm comparison, intra-firm comparison, comparison with industry norms, or all of the above. Actually, accounting ratios is one of the tools of financial statement analysis. It's a tool for financial statement analysis. Interfirm, intra, comparison, all. The answer is all of the above. Okay? The answer is all of the above. Now, second point, debt service coverage ratio. I think this is somehow they they love this ratio. Why do I say this? Because this particular ratio was asked in promotion exams. This particular ratio was asked in our regular exams as well, in our examination of JIIB as well. So I think I have seen this particular ratio having its importance like anything. And this is basically a ratio which is very judgmental. Why do I say this? Because when we talk about debt service ratio, na, it's gonna ask the person, Hanji, do you have the capacity from your profit that you can pay off your debts as well as your interest? If you can, then only I'll say ki nahi, you should be taking loans. This particular ratio talks about the area of ability of someone to repay the loan or not. So based upon this, what would be the answer, everyone? Judging the margin of safety available before there's a default in repaying the loan, judging whether the firm has borrowing disproportionate in its net worth, judging the capacity of the firm to service the interest on debt, or all of the above. It's not all of the above because margin of safety and the capacity of the firm to service is just not something which they choose. In this case, there's only one point, that is B. That is judging whether the firm has borrowing disproportionate to its net worth. Okay? The answer is A. नहीं नहीं judging whether the company has नहीं, the answer has to be A itself. Margin of safety regarding default and repayment. नहीं, it is related to repayment of loan only. So the answer is A only. B talks about disproportionate borrowing. It doesn't talk about disproportionate borrowing. It asks you that what is the profit you have and in context with your principal plus interest. Any kind of principal repayments that you have to make or any kind of interest repayments. That is why it is called debt service. So you have, if before the default of repayment of the loan, what is the amount that you normally have in your pocket? Which one of the following is true, everyone? Both earning per share and PE ratio vary with stock market price. While calculating DE ratio, fixed deposits from shareholders are taken part of debt. While calculating quick ratio, current liabilities are not taken into account. This is not true. Debtors turnover ratio is higher if the company sells more goods on credit basis than on cash basis. Earning per share is related to the area of earnings of the organization, and PE ratio is based upon the market price of the particular organization. MPS upon EPS is the PE ratio. So I believe the first one is definitely not something that we can choose. Okay? So this is also not true. Uh, the debt equity ratio, I think this is correct. Why? Because debt equity, in terms of debt, what will we do? Debt is basically the long term loans that we take. Those are called long term debts. The long term debts are a part of debt in this era. So in this case, the correct answer is B. While calculating debt equity ratio, fixed deposits from the shareholders are taken as a part of debt. Which one of the following is true? Higher debt equity ratio increases the profit margin of the company. Debt equity ratio is an indicator of solvency. A high current ratio is always an indicator of efficient management, or depreciation is not an expense, should be excluded from while calculating profitability ratios. Okay. When we talk about debt equity ratio, debt equity ratio will be higher if we get more debt. It is related to the area of solvency ratios. Acha, there is one more point. I've written solvency ratios already. Yes, I didn't miss it out. I was thinking I missed out the solvency, but we did it. Acha. Now the answer in this case, it is an indicator of solvency ratios. वैसे तो it is related to the area of solvency, but a high current ratio is always an indicator. A high current ratio is never an indicator of efficient management. High current ratio simply means that sometimes you have kept too much of liquidity in terms of your organization, which is definitely not correct. The answer is B only. That the debt equity ratio is an indicator of solvency of a company. It's B. Given? Which one of the following statements is correct about fixed assets ratio, everyone? It is ratio of fixed assets and net worth. It is a ratio of fixed assets and long-term funds. It is a ratio of less than 1 indicates short-term resources have been diverted for creation of assets, or none of the above. Which one of the following is correct about fixed ratio? Fixed asset ratio. Fixed asset ratio talks about the organization funds which are involved exclusively in the area of the assets. So this is basically the assets that you have built with your long-term funds. The answer is B, everyone. It is the ratio of fixed assets and long-term funds. Done. Here comes the next question, everyone. This question relates to the area of net profit can be greater than operating profit when the net profit can be greater than operating profit. Actually, operating profit and net profit has two differences. It has only one major difference. Operating profit talks about only and only that part of the profit which the organization is making because they are working. They are working, they are operating their business. So operating profit is the money exclusively generated from the business, while net profit is the general funds that you are generating. Then what would be the answer? Cost of revenue from operations is more than operating expenses. Operating expenses are more than non-operating. Non-operating expenses are more than non-operating income, and non-operating expenses are less than this. Okay, when we talk about the operating profit is more, that can be more because the non-operating expenses, the ones which are related to the businesses which are not because you are operating in the business. That means it is not related to the business. You might have got some money in the business and you would have put it in the FD. Now from an FD you will receive a good interest. What is the expense? There is no expense in it. So in this case, what will happen? More of non-operating income will be added and non-operating expenses almost nil. है ना? So in this case, the correct answer would be where your non-operating expenses are more than the non-operating incomes. Answer is D, everyone. Then here comes the next question. The question says opening inventory of a firm is 80,000, cost of revenue from operations is 6 lakh, ITR is 5 times. Its closing inventory it will be 1 lakh 60, 1 lakh 20, 80 and 2 lakh. Opening inventory is given, cost of revenue from operations is also given, but they haven't given that part. Okay, let's try this question. Your ITR is equal to COGS upon average stock. Your COGS is given, which is of 6 lakhs. Your ITR is given, which is 5. But your average stock, for the time being, I'm taking it as I don't know about. So then you take average stock on the above side. Then it will come out to be average stock is equal to 6 lakhs divided by 5. So that would be 1,20,000. Now this is the average stock. Average means first year plus second year divided by 2. है ना? So this is basically 1,20,000 is the average, which is opening stock plus the closing stock divided by 2. है ना? That is how we find the average. So in this case, our opening stock was of no issue. The value is of 80,000, everyone, plus nil. Actually, not nil. We don't know about it. So I'm putting it as the number x. And when we talk about The value of this question, it is 80,000 plus closing stock divided by 2. Now from here we will calculate the exact answer. This will turn out to be 2,40,000 minus 80,000 is equal to closing stock. So the closing stock comes out to be amount of 1,60,000. Done everyone? Just look at the question. I hope it is helpful for you. Just give a quick look to it. You will be able to understand the concept. And let me know if you're all done with it. Done everyone? See, in this case, first of all, I had to apply ITR, then I had to apply average stock formula, and then we calculated the entire situation. Then we calculated the entire answer, right? Done everyone? Let's move on towards the next question. This was 1,60,000. Acha, ROI is calculated under liquidity, solvency, profitability, or activity. Activity is also called activity turnover ratios, everyone. We have talked about all these ratios already. Return on investment means whatever money I have invested in the business, in how much, what is the amount of return that I'm getting from that amount that I've invested. What would be the answer, everyone? Liquidity, solvency, profitability, or activity? The answer in this case, ROI. ROI is based upon profitability, everyone. ROI is basically your profit divided by the capital invested multiplied by 100. So the percentage which you get is called profitability ratios, because you're talking about the returns that the organization can make from their business. Done na? So profitability ratios are those ratios which are related to the profit of the organization. How much profit they are making after investing good amount of money in the business. Next question. Assertion and reasoning based, everyone. Liquidity ratios are used to assess the short-term financial obligations of the firm. Current ratios and asset test ratios are two liquidity ratios which measure the firm's applicability to meet its current obligations in time. In the context of the above two statements, which of the following is correct codes? Both are correct, but R is not the correct reason. Both A and R are correct, but R is not the correct reason. Then we have only reasoning is correct, or both are incorrect. Think about it, everyone. What would be the answer, everyone? Liquidity ratios. Liquidity ratio is just to find out whether the organization can pay off the loans or not. On a shorter basis, will they be able to do it? Then when we talk about current ratio and then the asset test ratio, these are both liquidity ratios which talks about in how much whatever money we have in terms of the payments which they are making, right? Asset test ratio or current ratio talks about the current assets which you are holding for less than 1 year are covered under this. Done everyone? Everybody, no idea? When we talk about liquidity ratios, it is related to the short-term funds only, and current and asset ratio is also related to the area of the short term. All these ratios are covered under liquidity, so they technically both are correct. The reasoning as well as assertion, both are absolutely correct. There is no mistake in it at all. Everyone, current ratio is liquidity ratio, liquid assets upon current assets, fixed assets upon current assets upon current liabilities, or liquid assets are divided by current liabilities. Current ratio is current assets upon current liabilities. So the correct answer in this case is C, that is current assets divided by current liabilities. Acha, everyone, if the GP ratio is 20%, goods for 50,000 sold to employee at the cost which will decrease the ratio. There will be no change in gross profit ratio because both the cost of revenue and revenue from operations will be increased by the same amount. You know? What will be the answer, everyone? Is it both are correct? Both are incorrect? Then everyone, what would be the answer? GP ratio based upon production. NP ratio based upon the sales that you are making out of that production. What would be the answer? Go ahead. GP ratio is basically the ratio which is strictly related to the area of a trading account, while NP ratio is something that gets into the answer in this case is actually both are the in terms of this A is correct and the reasoning is not correct. The reasoning is definitely correct because uh, there's a there's a growth which is somehow lopsided in our country, where you will find that in some areas there is an access to all these things, but when we talk about the other areas, there can be scarcity as well, है ना? Done, everyone? Everyone, A is correct, but R is incorrect. Done? Acha, let's end this particular session here itself. But before I end my session, have you enrolled in our courses yet? If you haven't, then please go ahead and hurry up because the time is ticking away. So the best thing is to utilize this particular time so that we can learn a lot of things in this very limited area of working. So what you can do is you can take up the JIB May 2024 batch. Today we are starting with another batch that is at 7 p.m. I'll be starting with the topic of resolution JIB AFM. So if you're looking forward to it, click on the area of buy now, use the code Y541 and purchase your AFM module or the complete on that very basis. So when we talk about 6 months, you're getting it for 4913.79. So you can try it out. If it doesn't work out, then don't use. Done, everyone? Done. So let's end the session here itself. I'll be meeting you in the next class. Don't forget to use the code Y541 to get 80% discount. And this particular discount is something that you will get only or if you are downloading our app. So this is the particular area where you have to go in the area of JIIB and you can open up our courses and put it there itself. Okay, use the code Y541 and get maximum discount. I'll be meeting you tomorrow at the same time, everyone. So have a nice day. Thank you and bye bye.